There is an insane and imminent supply shock that's coming to Ethereum. Are you prepared? Look, queue up all the super bullish ETH price predictions, and I have one for you that is going to melt your face. You don't need it anyway with the price of Ethereum going this high. You can buy a new one, okay? Ethereum's price could reach a whopping $154,000 per coin by 2030. That's the kind of bull energy I'm here for. Let's go. That's according to ETF issuer VanEck. By the way, in this video, I'm going to break down VanEck's thesis here for Ethereum's price rise and outline all of the components that are building us towards this insane supply shock and massive wild price prediction. Because this one, it's like a firecracker waiting to explode. And stick around till the end of the video, of course, to find out exactly what role the upcoming Ethereum ETFs could play in this situation. It's a very important part of the conversation here. Now, look, $150,000 per token for ETH. That's a lot of opium, man. So let's look under the hood of this wild price prediction to try to work out just how realistic it could actually be. VanEck, of course, already has a physically backed Bitcoin ETF on US markets. It now has an Ethereum ETF version coming soon as the SEC allows them to start trading. So they do have a ton of data to pull from. Now, they just dropped a new report on June 5th called ETH 2030 price target and optimal portfolio allocations. Inside the report, VanEck sets out 3 different scenarios for Ethereum. A base case of $22,000 per token by 2030, a bull case of $154,000 per ETH, and a bear case of just $360 per ETH by 2030. That's quite the range. But even the base case, of course, is still a 6x from the current price of around, let's say, $3,800 where we're at today. VanEck believes Ethereum can become a high-growth commercial system that threatens to disrupt existing financial businesses and big tech platforms like Google and Apple. They see that Ethereum is already disrupting the finance world, the banking world, the payments networks, marketing, advertising, social media, gaming, infrastructure for the internet, AI, all that kind of stuff. So it's focused its price projections on forecasting key metrics like market share, revenue, token supply, and free cash flow. So when it comes to market share, VanEck estimates that Ethereum's current smart contract market share is 58% on a trailing 12-month basis. So it's forecasting that Ethereum will get to the base case by taking 70% of the smart contract marketplace. I guess that would be including their layer 2s. And for the bull case, it will need to take almost the entire thing at 90% of market share. And I'm really not sure what's going to happen. You have Solana and those other networks that'll be there too. No smartphone has 90% of market share, for example. Anyway, it's then forecasting revenue will jump from 3.4 billion to 79 billion for the base case and 362 billion for the bull case. VanEck also notes that the free cash flows from Ethereum from revenue will hit $66 billion by 2030 to help push it up to those crazy price targets. And of course, scarcity matters, obviously. So Ethereum's token supply must turn deflationary once again in order to boost up its price, which requires more users on the main chain. Now, VanEck forecasts the ETH supply to drop from around 120 million currently to 100 million for base case and 99 million for bull case. Now, for these forecasts to go from paper hopium fantasy predictions to paper gains for Ethereum is going to need a whole lot more builders and investors and users. And if there's one thing VanEck is counting on to boost demand, it is those hot, sexy, newly approved Ethereum ETFs. And we all know what happens when there is too much demand and not enough supply. Numbers go up. But before I talk through the supply and the demand pressures we're currently seeing and that could send Ethereum skyrocketing, let me interrupt the flow real quick to let you know about the best damn newsletter in the cryptocurrency business. It's called Wealth Mastery. It just so happens to be my newsletter, so I'm slightly biased, but it really is damn awesome. Our readers love it. I'm sure you will as well. Look, every week, my team and I are working very hard to bring you the latest and the greatest and the best insights in the market, from meme coins, altcoins, NFTs, DeFi, charts, technical analysis, and much, much more. You can join 125,000 plus weekly readers for free. Link in the description or the pinned comment on X. Check it out. Thank you very much. Let's talk about Ethereum's supply shock because it is creeping up on the crypto market pretty gosh darn fast. Since the Ethereum ETFs were approved on May 23rd, over 800,000 Ethereum worth more than $3 billion has been moved off of centralized exchanges and into cold storage. Prior to this, around $500 million worth of Ethereum left exchanges in 1 week alone in April, the highest levels at the time since February this year, which means the market ain't selling. They're buying right now, leaving only 10.6 of the total Ethereum supply on exchanges. 10.6%. That's crazy. This puts ETH on exchanges at its lowest levels in 6 years. Then it's speculated that there's only around 400 ETH left on OTC desks, which is pretty wild. And OTC desks are kind of opaque and those numbers can change fast, but still crazy. And it's crazy because the physically backed Ethereum ETFs in the US aren't even trading yet. What happens when they start trading? Where are they going to find all this Ethereum? Now, look, as long as Grayscale doesn't flood the market with all of its ETH, and they probably will, like they did with GBTC. So, keep that in mind. Anyway, this supply shock could get pretty wild pretty fast. Maybe we'll have to have a few weeks of pulling off the Grayscale band-aid, so to speak. Anyway, as Ethereum's price begins to pump during the later stages of the bull market, its token burn mechanism should start to kick into overdrive and to turn Ethereum deflationary again, perhaps quite aggressively. So now, if you don't already know, Ethereum burns a small amount of ETH with every transaction. The transaction fees, basically, that you pay end up getting destroyed forever. Now, another factor that could contribute to the supply shock is staking and restaking of the restaking. It's a house of cards, but that's in the conversation for another day. Anyway, Ethereum still has a massive opportunity for growth through its staked supply. Whilst the amount of staked Ethereum has grown by 78% since its Shanghai upgrade in April of 2023, only 27% of the circulating supply is currently being staked. Ethereum is the biggest proof of stake blockchain by market cap. But here's the interesting thing. When you compare its staked supply to other layer one networks like Solana, Sui, whatever, most of the others, in fact, it ranges anywhere from 48% to 81%. Ethereum is one of the smallest by total percentage. Now, as ETH continues to grow, more ETH gets locked up in staking. That's less ETH out there in the open market. Remember, 2-year plus exit queue for everyone to unstake right now. Okay. Now, especially if we see liquid staking and restaking on Ethereum's layer 2s continue to grow as it has been, then even more demand here. Now, if you're not already familiar with the concept, restaking allows users to take ETH they've already staked with Ethereum and then to restake it for extra yield to help secure other apps and other protocols in the ecosystem. Now, the more incentive that there is to lock up your ETH tokens, the less users are going to want to sell in the short term. Now, for what could be the mother of all demand shocks, of course, the Ethereum ETFs themselves. Demand from Wall Street and their stock market clients will have a massive impact on Ethereum's total price in the long run. Even with a fraction of Bitcoin's ETF inflows, ETH could be primed, with Bitcoin, of course, being the number one cryptocurrency and Ethereum being the number 2 cryptocurrency. Together, these two cryptos make up 60 to 70% of the entire cryptocurrency market. Now, I know the expectations are lower because it is number 2, but it also means it needs less money to move the market. And the dynamics are different, again, because of the staking and all that kind of stuff and the restake. And the Bitcoin ETFs in the US have reached the milestone of holding 1 million BTC worth over $70 billion combined, all within the first 5 months of trading. While it's unlikely Ethereum is going to pull in those kinds of numbers, K33 Research is forecasting that ETH ETFs could see up to 1 million ETH in the first 5 months, which is pretty damn significant. Again, only 10 million ETH on exchanges right now. That's $4 billion in inflows, and that feels kind of bearish to me. I feel like we're going to get a bigger number than that. That number is based on a couple different metrics. Firstly, a comparison between the assets under management in existing ETH-based exchange-traded fund products, ETPs around the world with similar Bitcoin products and similar markets. And secondly, the open interest in futures contracts on the CME exchange. So showing what the actual demand for Bitcoin versus Ethereum is. Now, to get an idea of institutional demand, if they're right, and up to 1.26 million ETH is accumulated by the new US-based ETFs, then that's around 1% of the total supply sucked away into these new products. That's not only the access to ETH that institutions want, of course, it's the revenue from management fees and Ethereum's yield. BlackRock now has $20 billion worth of Bitcoin and assets under management and a 0.3% fee. That's generating revenue of around, I don't know, a lot, let's say. Truckloads of money every single year will be made off of that. And that's without any revenue, of course, from staking, which Ethereum could have in the future if the SEC allows it. Now, once the ETFs finally start trading in the next few months, I wouldn't be surprised if the ETF issuers put pressure on the SEC to allow staking, because, of course, BlackRock is going to want that. Now, the SEC can only deny a staking feature for so long. It will happen at some point. Galaxy Digital's Mike Novogratz thinks we will see staking in the Ethereum ETFs within 12 to 24 months. With all of this bullishness hitting ETH at the same time from all directions, it seems the market could find itself in a pretty interesting place. The continuous cycle where the supply shock fuels a demand shock. Prices going up is, of course, the best advertisement. And that's creating an even bigger supply shock, and so on and so forth, creating a virtuous cycle until essentially run out of buyers and we hit the next bear market. Probably not bullish enough on Ethereum, probably going to 15K this market cycle, long term by 2030. Hey, I'm here for it, man. Let's go. VanEck, 150K, man. I don't know, but screw it. That sounds great to me. Anyway, what's your price target for Ethereum for this cycle? Mine's 15K. I've said that a few times here, but let me know your number down below in the comment section. Thanks for watching.